And joining me now in studio is friend of the show, Phil Rosen, founder and editor-in-chief of Opening Bell Daily. Phil, great to see you.
Great to see you, Kristen.
Yeah, so we see stocks little changed, but markets have continued to climb this wall of worry. What do you make of the markets at these levels?
There is nothing that is going to derail this bull market in the near term, because even a government shutdown, everyone I talk to doesn't even bring it up, because the government shutdown has done nothing to, let's say, raise volatility or put a dampener on the bull market. We have earnings keep getting revised higher. AI spending is still going up, and everyone is continuing to believe that there will be ROI on this AI spend. That's why the stocks keep going higher. And the recession odds just keep going down. So all this combines into a very bullish, and you could say, arguably getting a little frothy of a bull market.
Interesting. So at the same time that we see equities rising, we also see gold and Bitcoin setting new highs too. Why is that?
So JP Morgan came out with a note, I think it was a week ago. They called it the debasement trade. And even though JP Morgan just named it, right, and it's been picked up by the financial press, we're talking about it on air, this has been happening for years. Bitcoin and gold are a hedge against debasement of fiat currencies like the US dollar. The US dollar is having one of its worst years in decades. I think it's weakened more than 10% this year. And to no surprise, Bitcoin and gold are both at record highs. Gold hit $4,000 for the first time ever. And all this it's as much a bet on those asset prices going up as it is the dollar continuing to weaken, right? You have government debt will go up forever. We know that. Government spending will go up forever. And the US dollar has been in a structural bear market for decades. Mm-hmm. So all this is sort of making headlines right now, but this is not new, especially if you ask gold bugs or Bitcoin investors who have been buying these assets for years, right? They're not even looking at this new debasement trade that JP Morgan's talking about and the media is talking about, because they've been in these assets for a long time, and they have been protecting their purchasing power.
So do you think that these trades, gold and Bitcoin, have further to run?
Seasonality would suggest yes, right? At least for Bitcoin, because I think in October's alone, Bitcoin averages something like 20% a year. And in the last 10 Octobers, there's only been one negative October for Bitcoin. So Bitcoin investors are very bullish on this month in particular every year. And when you expand that to the fourth quarter, Bitcoin's gains go to almost 60% a year for the last 10 years. So I would say there's historical reason to be bullish on Bitcoin, right? And then if you have this pairing with gold, gold's momentum has been unbelievable. It's actually outperforming Bitcoin this year, which it typically does not do. So that's a rare occurrence. And you have JP Morgan coming out with naming the momentum, right? When you give a name to something, when you have an institution give a name to something, you could say that it's a bit of a top signal, right? But in this case, I think because it's such a macro structural trade that's actually been happening for many, many years, JP Morgan naming it is not going to be a top signal in this case.
Interesting. So we talked a bit about seasonality. You referenced it there. It was a relatively calm summer. Markets continued to grind higher. August and September, traditionally more volatile months if we look decades past in history. But September was pretty strong, right? And it is behind us now. What does that tell you?
September was unbelievable. Everyone at the start of the month, including myself, right, was sort of positioning for a negative month, because September is the weakest month of the year, typically negative, dating back to 1950, I think. But this year we were up more than 3%, and that's very unusual and very bullish for the end of the year, because when September is higher, the fourth quarter tends to be very strong. So to me, this combines with the macro trends we were just discussing. You have AI spend continues to be positive, and people expect it to deliver ROI. Analysts keep raising their earnings expectations, and recession fears have pretty much evaporated. And if you look at the VIX, right, the volatility index, that is several ticks below its long run average. So I think this morning is about 16, and its long run average is about 19. So even with government shutdown, you could say turmoil in Washington, investors are not paying attention to that at all.
You know what else I like? Delta Airlines, which is an NYSE-listed company, reporting earnings this morning. In some ways, unofficially starting the earnings season. We'll get the big bank results next. Many of them, of course, listed on the NYSE too. And Delta's results were strong, Phil. I mean, you talk about how the economy is holding up, sentiment is holding up, the government shutdown is not really phasing investors. And in fact, even Delta's saying during this earnings release period that they have not seen an impact on their business due to the shutdown, despite some news reports that we've seen that it is challenging. There are delays traveling during this period of time. Delta stock, for instance, up 8% pre-market. Does that give us a good indication about overall sentiment among consumers?
Yeah, and I missed the Delta earnings this morning, but generally I would say consumer sentiment has not paired up with consumer spending. So consumer spending has been way stronger than most economists predicted it would be by this time of the year. If you remember in April, when tariffs came into place, Liberation Day scared everyone, markets sold off big. All the economists and all the institutions were expecting a recession. I think recession odds went to some ridiculous number, and now they're at very low numbers on prediction markets. And a big part of that is consumer spending. Consumer spending has not cracked or broken as a lot of economists expect it to happen. And I'm sure travel and airline spending, that's a part of the equation there.
I do very quickly want to talk prediction markets, the trends that you see, because earlier this week we saw Intercontinental Exchange, the parent company of the NYSE, announce up to $2 billion worth of a strategic investment in the prediction platform Polymarket. Again, the trends that you see in this space.
Yeah, I mean, obviously that's an enormous vote of confidence from a major institution like ICE, right? Betting on this prediction market, which, the whole space is fairly new, but something like Polymarket and Kalshi, it's very rare you see companies like that blow up to this size so rapidly. And this is if you look in the stock market, you see zero-day options have become extremely popular, right? People want really short-term things and events to sort of gamble on, right? If you call it for what it is gambling, which if that's what you want to do with your capital, I think that's great. And if you have more options to do it, great. But if you look at the emergence of levered ETFs as well, right? So that's another signal that people want riskier, high upside asymmetrical bets to take. And prediction markets, zero-day options, levered trades, these are all booming right now. And that is probably not going away anytime soon.
We are following it closely here at the New York Stock Exchange and, of course, among our parent company, ICE as well. Phil Rosen joining me in studio. He's the founder and editor-in-chief of Opening Bell Daily. Phil, great to see you.
Great to see you too. Thank you.
Thanks again.